Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it the same UTC. A big shout out to everybody joining the stream live today, as well as everybody watching this on catch up. And a special mention for our DYDX competition winner back on Monday. So really, really good fun from those guys. Wonderful friends and partners of ours over there, and just a really lovely thing to do, I think, at a time when people are mostly looking over pretty shattered portfolios, right? It's that time in the market where people start to get a little bit exasperated, and people start to think that everything's over, and the P&Ls don't look quite as good. Everything's kind of taking a little bit of a step back. So far from just wanting to pump some hope into the markets, right? One thing I really want to do today is just get into some altcoins, take a look at where they are. The market is obviously bleeding incredibly hard. We're going to start with BTC. We're going to look at what news we have coming up today. We've got FOMC, so we have Powell taking the microphone later today, which we know can be a major catalyst for volatility. If we get some dovish tones from him, then we could really see some recoveries in crypto. We're going to take a look at the risk markets as well. We're going to take a look across NASDAQ, just so you can see the alignment or the lack of alignment. We're going to investigate that a little bit closer. But obviously, like always, we're going to start here on BTC. So I am here to take your alt requests today. So if you've got anything you'd like me to take a look at, please do let me know. We had some requests earlier for Ethereum, AVAX, and FET. So any more, do let me know. Craig, how are we doing, my friend? Good to see you with us. Good Craigie boy. Nit is with us as well. Daniel, good day, boss. Here we go again. Awesome. Yeah, it does feel like that sometimes, doesn't it? So look, I know people are still starting to come in, but let's crack this on, right? I want to get this done pretty efficiently. We're aiming for about 45 minutes today. Normally means I rattle on for about an hour, but I think we will aim for a slightly shorter session. Remember, ladies and gents, if you have any charts that you want me to look over, please do just drop them in the comments and let me know. So where are we at the moment? Let's zoom out to the weekly. We're just going to rip through this really quickly. Bitcoin's just ranging, right? As my good friend Follis says, don't diddle in the middle, right? We're just at this mid-range point at the moment. And what kind of clarity do we have here? Yeah. One of the things with price action that's really important is when you start to see a number of failure swings on both sides of the market. Yeah. So price failing to take the highs, price failing to take the lows as well here. This is how you get a really good kind of indication that price is consolidating. As we look at a weekly chart here, and I know this is going to look a lot different when we look at some altcoins, right? But Bitcoin here is kind of, we've had this breakout from a really long consolidation. I mean, it's actually quite scary how similar this fractal here. Yeah, so let's do this. Right, looks to this. Yeah, so you can see that these periods of chop can go on for quite some time. I know this was, a little bit protracted, but it's very, very possible. The market is digesting a lot of information at the moment, right? That's what we need to remember. We've got the first pro-crypto president. You've got Elon Musk's presence in the White House. We've got China that have legalized, the purchase of cryptocurrency, for example. We've got these kind of little bullish catalysts bubbling away in the background, but I actually think there's also a lot of confusion in the market at the moment, right? So really, your major players, they need to really digest all of that. And at the moment, with pretty strong bond markets, right? US 2s, US 10s at the moment, looking very prosperous, all right, holding this key level here on the 10-year. US 2s consolidating here after shifting structure back to the upside. We also have a remarkably strong dollar. Although the dollar's back under our key level here of 107.713, we haven't seen that flush through quite yet into cryptocurrency, all right? So what's the story of this? Well, I'm starting to really look at this, that Bitcoin's behaving a lot more like a kind of traditional market asset now. Now we've got the ETFs. Now this is on the balance sheet of so many major financial institutions, banks, hedge funds, etc. You know, the market has to work out how that trade plays out, all right? I think ultimately the market looks good for cryptocurrency in the long term, or actually the market looks good for Bitcoin in the long term, right? But it's a little bit of a tricky one as we kind of look through the alts. Basically, the markets are about liquidity and they're about risk. Are we in a risk-on environment? Are we in a risk-off environment? Is the liquidity there, the purchasing power, if you like, to kind of simplify it, to fuel these risk bids? And at the moment, I just, you know, the kind of Trump coin debacle ripped all the money out of alts. Alts have really struggled to get a footing since. I think they're still seen as far too risky. And I think anyone that was really considering them as major portfolios, it was just, you know, that rip away, I think, put a big ripple through the market. All right. So we're going to decant that and look into it. Raphael K, very welcome to the show. Great to have you with us, my friend. Yes, certainly we can look at Hype. A really dear old friend of mine who used to be a fundamental analyst with us over at the Bird Nest called Julian. You can find his handle, King Julian Am I. Just a wonderful fundamental analyst, was super early with Hyperliquid, like crazy early, and has just been an absolute beacon for that, going through our very own trading tank as well. Another one of our analysts at the Bird Nest has played and traded that incredibly well. And you know, the airdrop that they did was epic, wasn't it? I think this is actually one of the plays that could really hold up because they've just been so impressive. So we'll definitely take a look at Hype for you. We'll also take a look at ETH. I want to take a quick look at FET as well. I know that's come up. If anybody does have anything else, let me know. Right, so blabbering over, what's the current state of Bitcoin? Well, quite simply, if we just put the weekly levels back on here, right? This for me is quite simple, all right? Because as we look at price action, what is it doing? It's just consolidating. This level's capping the market at 105, 160 flat. That means that it's a double zero at the end. When you think about, you know, the amount of money washing through these markets, quite difficult to get these round numbers. So round numbers are always of interest, right? We see it again down here, 92,273 flat, all right? So this is the high. You can argue this is capping the market, but this was the swing failure that led to price selling off, all right? When price came back down and you saw this large reaction here, you know, basically you can expect a slightly deeper correction. We then look for where price could correct to. So our plays, we're looking for price to come back here and retest this order block, all right? So that's the down close candle. Price swept liquidity, closed above it. This becomes a high probability area for price to draw to. And originally what we were looking for here was for price to do this, take liquidity from the highs, find support here and then move higher. However, obviously price came back down here. We closed a large bearish engulfing candle back within this range, which means that at this point we're relatively neutral. We're then looking for how this week plays out. And obviously this week just did liquidity both sides of the lower time frame markets. Since price has then kind of just been stuck in this area. What I don't like about it is, if we look at the 50% here, we keep testing ourselves into the 50% of this. Now, obviously on a weekly scale, it's okay because we're holding this. So actually still leaning a little bit more bullish rather than bearish here on Bitcoin. But if we look at what's happening, down here is the area that you want to be a buyer. And ultimately kind of up around this area here is where you would want to consider being a seller. Okay, until we get some kind of confirmation or breakout, this is playing just like a range, rejection from the highs, buyers at the lows, rejection at the highs, more buyers at the lows. So as we look here, we can look at this going to pick up over here? The big picture, yeah, greed. As we look at like things like the fear and greed index, for example, in crypto, you can see that we're much more down in the fear side of the market than anything. When we were up here, we were massively overextended into the greed area. So, you know, markets do look at sentiment like that. You think, are we overextended here? What's the big play? Are we drawing retail into purchasing up here? If you're drawing retail into buying up here, it means you can take the opposite side of that and you can fill all those orders to the downside. All right. Hey, Deepak, how you doing, my friend? Yeah, we have all of yours. So this is Deepak, everyone, the winner of the competition on Monday with DYDX. Congratulations. It's, yeah, we've got it all with you, my friend. DYDX has been notified and you'll be contacted later today, I believe, to get your prize, which is $500. So huge congratulations to Deepak. Obviously, you know, they'll be asking for certain information in terms of confirmation. We just need to make sure, you know, you're exactly aligned with the trading handle, which I'm sure you are. But yeah, any issues with Emma, you can always reach out to me on my Twitter or through at the Bird Nest, but that will all be sorted for you, I believe, later on today. So keep your eye out for that. And a big congratulations on the win. So what's going on at the moment? I'm very neutral here on Bitcoin. At the end of the day, we've reacted back down at this key area, but we failed to take any kind of swing liquidity. All right. But again, this is the level that's capping the market. We've seen a long downside wick here. This doji candle shows us indecision, but also now just means that we've stepped into an inside bar here on a weekly scale. All right. So I'm just going to show that by these two lines. This is the mother bar candle. This is the inside bar candle. All right. So then we're looking to run this one way or the other, and then we play this as a range. So from here, it's entirely possible we expand to the range highs or that we come back down and take these range lows. What I like about this now is we have this swing low down here, which is sat again, you know, looking around on 91,279 flat. So this will be a great area for price to kind of flush out, get everybody super bearish, get that recovery, step back in the range, and then for price to move higher. You know, I'm not the greatest exponent of this in the world, but if we're also looking at the volume profile here, what we can quite clearly see is how the value area low has given us this range, the value area high, price kind of came back in, closed within here, meaning we can then target the areas around the value area low. We also have the point of control, which is acting like a midline, and price is just kind of smashing into that at the minute. So that's the kind of area that we're at. It's just this massive point of indecision today in the market. All right. So we just want to be looking at that. Foreign trade crypto, how are you doing, my friend? Good to see you with us. And Williest as well. Great to have you back, buddy. So on Bitcoin, that's pretty much what I'm leaning towards at the moment. Just to take a look at this for you on the lower time frame, what do we want to see? What conditions do we want to set? Well, what I quite like at the moment is that we've taken some liquidity from the lows here. But as we've been talking about since obviously last week into this week, this order block here, this very large bodied order block, which confirmed when price closed underneath it here, has just been capping price to the upside, right? At the moment, there is a very small gap up here that I think price is drawing towards. Okay, so let's just draw that in, which is our daily gap here. So from here, I can then start formulating a plan. So my conditions here really are what a price drawing towards this, so favoring long setups for price to come and fill this inefficiency. We've taken liquidity from the lows. We saw a long downside wick, showing the buyers are willing to step in here, and price is ultimately pushing higher, I believe, towards this gap. Then just looking down here, we're now looking for things to support that. Okay, so in terms of that, one thing we can see here is we've set this order block. We also have all this liquidity, right? Here, 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 and here. See all these untapped highs, like trend line liquidity. What you'll notice, especially when price is ranging, is as price moves up here, yeah, we see this move up. Then we can see what does it do as it leaves this in its wake. It's leaving all this untapped liquidity, all right? Then what happens is when you see that shift and market starts to break down here, where does it look to target? It looks to target all this untapped liquidity, right? So this is known as trend line liquidity, or for anybody that might have studied Michael's concepts, ICT, then, you know, this would be considered low resistance liquidity. All right, it's the market generating liquidity here. People start to get bullish too late. The flush takes them out down here. People start to get bearish too late when actually we're holding this really nice low. Look at the bodies here. You get this bullish engulfing candle. First indication the price could be looking for a little bit of a bounce here. So if I'm now looking intraday where I want to play this to, then one of the first things I'm adding to the chart here is going to be the prior day's high. All right, PDH, meaning that this is a key liquidity pool that price can draw towards. So at the moment, we really need to get price above this high as well for any significant structural shift in the market. So this really is the key area of interest for me here. I'll obviously decant that down and draw it onto lower time frames for intraday. So for example, we got an inversion of this large gap over here on the left, which was the first indication after this one. All right, the price was willing to move higher. So then what we do is we then target the next key liquidity, which was this gap, until we get some kind of structural shift. The real key thing for me came in here, all right, which is when we inverse this gap. This is a beautiful move here from price, right? Because we can see price dipped into the lows down here. What happened? Price took out this low. These red boxes represent Asia's range, by the way, just an indicator built by one of our awesome members, GOT. So what happened here? Price came down, swept out liquidity. Then we had this move higher. We inverse this gap, yeah? Meaning when you invert it, you close through it, violating it. We now look for that area to become support. And in doing so, we did a couple of interesting things. So we've now actually moved to bullish market structure. Remember, this is just on the hourly. We're still ultimately bearish on the higher time frames until we shift structure. But we're looking at the moment for price to draw towards this gap on the higher time frame, as well as our prior day's higher. So as we start to come into today's session, I'd be looking for these gaps here or this order block area here to be retested to give us the opportunity to get long here and target these highs. All right, so that's what I'd be looking at on an intraday basis. As we zoom back out, obviously just remembering price is basically just chopping around below this level. We'd really need to see price above this high here, which is at 98,842 and 34, before we get any kind of structural shift, in which case it's then going to be super important to start to see some of these large down close candles like this set here closed above and this area turned into support. All right, that at which point we might start to see Bitcoin building a base here and starting to move higher. Another thing that we can look at here, you don't have to get all of them, but look at all these wicks, right? Look at this area of absorption, the same way as we've got this on the lows here. You know, price getting up and above this and turning this to support will be absolutely key in Bitcoin's next move higher. So without further ado, let's move across on to Ethereum. Okay, so we can see we've still got our analysis sat here. Good idea to continue from this, looking for price to draw down, you know, a higher time frame version of this trend line liquidity, these untapped lows that sit here, an absolute magnet for price. Price has also come down and inverted this large gap on the left. But technically, if we're in, you know, bearish delivery here, yeah, or order flow or market structure, for example, however you look at it, then really we're focused on what's on the sell side of the curve rather than the buy side here. We're aware of these gaps, right? We want to be aware of them, but they don't dictate what happens as much as this. So as was before, the reason we've had a bullish buy stepping into this week is looking for price to draw up towards this weekly gap. All right, I believe we also have this here. All right, now this is important because this is our last low pre-break, all right? And this is a concept that I learned from Tom Dante, who I still think is one of the best price action traders in the world. I think Dante would probably slap me a little bit and say that he would focus more on this one here. But for me, especially transferring this over onto crypto, I find it very, very useful looking at these in this respect, looking at the highs and lows. And let me show you for why. So this is an example here of the last swing high that we had. Yeah, well, not the last one, but an untapped swing high here. Yeah. When I'm looking at these untapped highs and lows, when we close above it, I'm not interested if we wick above. The amount of times that these areas get retested before price moves away is really, really interesting. You know, again, something that I would recommend anybody does in terms of analysis. here was another very good example, right? Swing low, price closes below. So we draw back to this area. These areas offer really, really good resistance or support. Obviously, if we're looking at it in the other direction, you want to look at these highs. I don't think actually Ethereum was particularly kind with us here with this one, but we draw it across. We never tested into this area. When we came into this area here, we closed below and then actually retested it as resistance, selling off. All right. So just looking at this here on the weekly, this is the premise. We've taken a lot of liquidity from the lows, looking for price to draw higher towards our last low before the market breakdown, and then this weekly gap. Okay. So Alex, hello mate, and Yargo. Alex, thank you very much. You're always too kind, my friend. Squad Busters Grinder, how are we doing, my friend? Not Burb, unfortunately. Don't have the same silky Polish tones. I appreciate we're broadcasting across his channel, my channel, and the Burb Nest as well. But I'm BC Richfield. I have the absolute pleasure of running the trading team for Adrian and the magnificent Burb Nest. So looking at this on the daily, what were we looking at? Well, we're in a little bit of point of confusion, right? Because we basically had this daily order block here, a bullish order block, which is supporting price, and look at how the bodies have respected that. And on the flip side, we were then looking for this order block to be closed above here, giving us continuation. We did close above it, but then we closed back below, violating the 50% of that, meaning that I'm not really that interested in that at the moment. We haven't closed below the up close candles or bullish candles. Yeah, so a close below this same level here, for example, would then have me believe that we're targeting these lows down here. And we would need, in my opinion, on a daily scale now, to be looking at this closed above. So this is our daily order block. It's not a confirmed order block until price closes above it. Then I would look for retest of this area and price to sweep higher. Previously, we were looking for price to take out these equal highs. It did. Again, look at how price reacts at key levels. When price comes up and takes this liquidity, you've got failure swings here, here, and then we take it back to here. These are all equal highs or relative equal highs. You know, flat highs, trend line highs and lows as well make really good liquidity pools. So why is this important? Well, price coming and taking this out. Look at how the candle closed. We swept this higher. Price closed below, meaning the chances are high that price is then looking for liquidity lower. Ultimately, it got it below the prior day's low. Price then closed back above this, showing absorption from the lows. So now we're looking to target the highs. So that's where we are. So then now let's decant that in and look at this. So it looks very, very similar to Bitcoin. Let me just turn my session breaks off. All right, so what have we got here? 4-hour order block. Apologies if you can hear some noise at the moment, guys. Unfortunately, they're continuing to do gas works around here. So as we look at this, what do we do? Sweat liquidity from the lows. We even took out liquidity below those lows. Then price came back in. Now, the interesting thing here is, yes, we closed below this low, but look at how price reacted here. Price reacted, popped straight back up here. Then when we get this bullish candle here, immediately the first thing I'm thinking is, okay, where is liquidity higher? Where can this thing be looking to reach for? If buyers have stepped in here, they're going to want to sell to willing buyers higher up. Where do we know there's willing buyers? At swing highs, yeah, and also at swing lows. So now we want to see how this candle plays out. All right, we've only obviously just started this at the moment. It would be a little bit treacherous to just look to go short from here randomly, although we need to appreciate we have also taken out, let's have a look, the swing high here, which wasn't the high of day. Actually, the high of day for Tuesday was actually the high at the open up here. So potentially more room for expansion. We're going to get rid of this at the moment because that doesn't confirm until we have a daily close. So what am I looking for here? Well, look, the key thing that we've got here is we do actually have a structure shift. Yeah, because we've gone from setting lower lows, lower highs, lower lows, to now setting a higher high. We now want to see price set a higher low. Yeah, so doing something like this. Definitely not with that. So doing something like this where price has now come down, we've set the low, higher high, we now want to see a higher low set and price to move up. So what do we need to do to see that, or what do we need to get? Well, we want to see price reacting somewhere, right? Now, we've already reacted at this order block, right? So that's fine, I'm happy with that. So we have a nice slender bullish gap here on the 4-hour, all right? So we'll label that up our H4 gap. So what would be my ideal scenario to long Ethereum today would be this. Would be to see price return to here, and then we make a move starting with this high and then higher up. What would be my invalidation scenario? Well, that would be this. And it doesn't mean that you can't play intraday shorts to this area, by the way, if you get confirmation, but let's focus on the higher time frame. If we got a bearish candle close below this, we would invert this, making that resistance. I would then be looking for price to return to this area and seek liquidity lower. As we look down here, yeah, I'd look to the 50% of this order block area. So from the body high down to the wick low. So I'd look for that to offer some kind of support, but ultimately it's this low, right? That's the next key liquidity here for price. So if we start to break down, if we violate this, then I think we move lower. Ultimately, as long as we hold this area, I'm happy to bet that price can move up from here. But I want to do it from an area that's going to give me a chance. You know, I need to do it from a gap, an order block. Like I said, a last high, in this case, pre-break. If we get price close above this, which we haven't had yet, then price closes above this. This is going to be an area I'm looking at to offer support. All right. Squad busters, thank you very much, mate. Really appreciate it. So that's where I am on ETH. I know a lot of these are going to look quite simple. So let's move on to Hype. Yeah. Let's move on to our friend Hype. Let's go over on our Bitget contract here. So look at just the absolute sheer resilience of this. Yeah. It's really, really impressive. You know, the market is just absolutely getting tanked here. And, you know, we could do it on anything, right? Let's just take a look at AVAX, for example. Yeah. Look how well this has held up, right? We had these spikes in AVAX, fine, but then look at when price just got lost here by so many crypto. Crypto had this mass sell-off. When actually look at this here, look at the consolidation that's been put in here by Hype. That's really, really impressive. One thing that concerns me a little bit is we have a lot of liquidity down here in the form of this trend line liquidity we were talking about, all right? So, you know, you've got untapped low, untapped lows, and equal lows there as well. That's definitely going to be a key liquidity pool. So let's draw them in, label them up, pop an alert on this area here. So we're ready and raring to go. If price flushes out to this area, we would look for something like this, a very fast recovery, a sharp V-shaped recovery of this area, and then look for this area to be retested, all right, as support. Again, you know, these lows are going to tell us a lot. If we get a strong body close below this, then I'll look for this to be treated as resistance, you know, using our using our retest low theory. However, we climb back above this and we just get a wick below and get back above. I think that's bullish, and then price will be heading higher. So ultimately, we've got a nice liquidity pool down here. Price has taken some liquidity from the highs over here. I don't think we took out this high yet. So we've got equal highs to the above as well. So this is setting up. Let me just check these are equal. 28.50, 28.45. Beautiful. So like really just almost bang on perfect. So we've got liquidity to the lows, liquidity to the highs. What was price done last? Price has taken liquidity from the highs here. And then we've now had that change in delivery. We've set a daily order block here, meaning that price is seeking liquidity lower. So when we closed here, we look for price to retest this area before selling off. We need to see price close above this down close candle, or these down close candles now, to get that change in state of delivery to look to trade that higher. We also have another batch of equal lows down here, which I would be amazed if price didn't take them out today. We have taken a little bit of liquidity here, you know, internal range liquidity, if you like, meaning that if we look at this here as an expansion leg, this is internal to this is internal to that. External of the range would be kind of here and here, really, or maybe even as far back as this, because this is the last low that took liquidity from the highs, and price has just been moving up since then. Oh no, this took liquidity from a low here. So this will be a very interesting low to look at as well. Yeah, Mantra and OM, no worries. Met the Mantra team out in Singapore for token this and Dubai, actually. Really cool guys, really nice merch. I've still got my bright pink Mantra socks that, that occasionally make an appearance. So as we look at Hype here, you can just see the build up of this liquidity. Now, for continuation plays, what I'd really like to see are these lows run. All right. So for price to again sweep these lows, quickly recover this area, get in here, and then I think we start making moves. First of all, to close above this, confirming this is a bullish order block. Then I think we take these equal highs. We look for that high to be closed above this area, then to act as support, and then for price to ultimately move higher from here. So I really like this setup for long plays. In terms of shorts, it's a little bit tricky at the moment because we have taken liquidity from the lows. If these equal lows don't get taken at the moment, I would be looking for the daily close to step in and for us to set this as a daily gap. If we set this as a daily gap and we don't take these lows, my expectation would be to short from this gap down to these lows. Again, if we close above this gap, then that becomes an inversion gap and we look to use that as support. So that would be our daily. Looking at this on the 4 hour, we can see we've got a really similar situation. Now, what we don't know is if this is so strong hype that we've got enough liquidity that's been swept from here and we don't need these equal lows. I find that a little bit difficult to believe. I really do feel like we're going to take these equal lows. So all we're looking at here is price to come up to this area, and then price to come back down. So again, drawing to this area, we have a slither of a gap across here as well. And again, start of that gap here wasn't retested. So we can draw that in and look for that to be something that we draw back to and then push down. All right. 111 comment, the stonk market is rigged. No one should need an education to make money in the market. Yeah, I mean, look, mass manipulation across all markets. I think whether you look at traditional markets, I've been a trader of Forex markets, indices, even equities back in the day. A lot of that is in the same way, like most things are. It's all about the weaponization of things like media, news, and ultimately control. That's why the US is winning a big battle at the moment, or not winning a big battle. It's got its issues because it's looking at too strong a dollar, and all these tariffs are going to really make the US potentially a lot less attractive for investors moving forward. So that's what, we need to look at, or not so much for investors, but certainly for companies that want to deal with them. So now looking at this, we've set this 4 hour order block here, right, when price closed below. So we're now looking for retests of this area to potentially short lower. Now we need to remember that we're very low in this move on a daily scale. So ultimately it's a little bit tricky, right? You come back down to this and then, we could sell off from here. I still really like us drawing up towards this gap. However, if we did get some intraday positions here, I just think the draw on these equal lows is really, really strong. So we've got our conditions. For a starter with this, we would need to see price close above this down close candle here and then retest this area as support. But we need to be very, very conscious that we're just drawing up into a daily gap here and we need that daily close above to really look for those continuation plays, okay? So let's move on to Mantra. I'm guessing you meant Manta, mate, was it? Or is there actually a mantra? And I thought it was mantra as well. I should really check my socks. More like a manta ray than something being a mantra. So let's take a look here on the daily. What have we got? Okay, so we've had a sweep of some liquidity from the lows. I don't know if they're equal lows, actually. Let's take a look. The low comes in at 36.36. No, this one came in at 36.40. So as we look over here, we can see that one's a bit lower. So we've had a sweep of this low now. So we've seen liquidity's been taken on a daily scale. What's happened? Price has stepped back into this range. Now that can tell us that price is actually looking to get some relief higher. So where's the first point that we could run into is this very skinny order block over here. But actually, do you know what? I kind of favor this one a little bit more. It's a larger order block. These order blocks are within the range of this. Price closing below this, seeing a bounce from here. We could be looking at just getting a relief bounce here to this area before price sells off lower. So on an intraday basis, longs are definitely on the cards today as well. If we close with price as it is, then we would also be setting a daily gap here. I'm going to take that off the chart, but obviously if we do set that, we can look for price to then engage with this and sell off or close above it and give us an indication that it's looking to move up. to these highs over here and the liquidity resting above. 4 hour, I think, might give us a little bit of a clearer indication. Okay, so here's one thing I really like on the 4 hour. It is a skinny gap, but it is a gap nonetheless. And we've had this inversion now. All right. So again, whenever we're looking at this, what we're looking for is basically like conceptualizing support and resistance. Okay. So when price is selling off, yeah, we look for bearish order blocks, which are bullish candles. All right. To defend the price. Yeah. So to push price lower. So here, price closed below. Look at how this area is retested. Price sells off. All right. Now, even in the opposite, then when we get the down close candles, right, the price closes above like this one. See how it was retested here and price even here caught a bounce. Why wouldn't we be so interested in trading this one? Well, it's not bad because it swept some lows, but ultimately we're delivering bearishly at the moment. This could be a first stage indication of a recovery, but we would still trade it with caution. What we would then do is, as price then closes below the up close candle here, which is the body, yeah, look at how price then retests this area here. Obviously price comes in, we close, we get that sell-off, price then comes back and closes here. Price then comes back above, but at no point do we close above the top of this, right? Now, we do get a violation here of the 50%, in which case I would then be a little bit cautious because I would then expect price to move higher. Ultimately, what it did was came and took out those equal highs and then, you know, continued with type to sell off. So with that in mind, what are we looking for here? Well, we want to see the gaps respected, yeah? And we want to see highs and lows for our liquidity. So we know there's liquidity resting up there. We do have an immediate high here as well. Price has now violated this. So I'm actually looking for bullish continuation here if we get it. We haven't shifted structure yet, but we have two key areas that we can look at to be a buyer, yeah? So price has come up. We've had this nice expansion, big, beautiful, bullish engulfing candle showing us that price has really kind of stepped in here. We've got that, sorry, buyers have stepped in here. We've swept liquidity from the lows, high time frame lows. Again, look at the wicks, right? This is a high time frame level. If price wanted lower immediately in terms of looking at this momentum, then we look at the close, all right? So when we had, for example, this swing low over here, right? What happened? Price closed below. Look at the big full body candle momentum taking us to the downside. This area was then retested before price sold off again. However, when we came into this low, price couldn't get below it. We saw a huge wick to the downside. Then we saw a bullish engulfing candle. We say, okay, let's see what happens with this gap, because that gap was designed to reject price further. When we close above it here, we now have a bullish gap here, and we also have this inversion. So at the moment, intraday shorts into this are very possible, but ultimately the higher probability plays come from either here or here, and watching this reaction taking price higher. We also need to appreciate that we are kind of a little bit overextended down here. We need to factor in as well, just before we move across, let me just share this with you very quickly. Just zoom in on this a little bit. Okay, so here we are, Wednesday, February 19th. What have we got to factor in today? President Trump speaking. That can just do anything to the markets. That's coming in at 2 p.m. UTC, which is about an hour and 40 minutes from now. But this is the really big one tonight. FOMC meeting minutes. Powell's tone can really dictate what happens to the market in the short term. All right, so just before we're going to move across and take a look at OM as well. And oh, Squad Buster, sorry, I didn't see that, my friend. Yeah, sure, we can take a look at VET and Link as well. No worries. Okay, so as we move into that, I just want to just show you this quickly. As we're looking down here for strength in the risk markets, we also want to be factoring in the indices, right? What we want to see in an ideal world are bond markets starting to weaken. These look pretty strong at the moment. We ideally want to see a weakening dollar as well, but that, you know, I factor that much more in with the bonds. So at the moment, it's a little bit neutral. Yeah, twos are down for a little bit on the day, but the tens are up. Ultimately, this has shifted structure to the upside now and is holding a key support. So we need to be cautious there. The higher these move, the more appealing they become to investors, because you're getting a good yield on these. You know, anything above, you know, you're roughly at 4.5% at the moment. So that means that just buying government debt, pretty much the safest debt there is returning you above inflation. So for a lot of these funds, that's where they're going to want to put their money, is in more of a safe haven. All right. Now, what we really want to be hitting the market is for the money printers to come on, for us to get that quantitative easing. That will really kind of help inject some liquidity into the market, put some money in people's pockets that they're willing to speculate with, but we don't have that yet. So what else are we looking at here? Well, as we factor that in, like I said, we now want to be looking also here. You have to forgive the noise on the chart because we actively trade this, but we have a lot of liquidity resting higher here in terms of equal highs. We also have an untapped swing higher, and we can really see here, right? Look at the strength in the market. You know, this is the NASDAQ, right? So this is represented by the NQH contract, which is the minis, which is what we trade over at the Bird Nest. But we can also look at ES here, all right, in a similar kind of situation. Liquidity drawing us higher. Ultimately, we're still in bullish structure. So the indices are showing us that the risk bid, because these are heavily laden with technology stocks, right? So when we look at traditional markets, that's what we're looking. Ah, God, well done, Craigie boy. Do you know what? I always do this. I carried away looking at my other screen. So let me run that again. Good heads up, mate. So look, here on the risk market, sorry, we're looking at this here with the NASDAQ. So this is what we've got. We've got a lot of liquidity resting above equal highs. We've got this high, ultimately the higher high over there as well. Thanks, Foreign Trade Crypto, that and Craigie boy, for a great heads up. You have no idea how much I do that on our live trading sessions as well. So as we look at this over here, we can see liquidity drawing up. Basically, it's showing us that the risk market is pretty strong here. One thing that's interesting is actually, if I just show you the NQ1 contract, there's less on there, right? We've got higher high, lower low. We've now got a lower high. So the NASDAQ's looking a little bit weaker here when we compare that to the S&P 500. We've come a little bit higher up here, but we still haven't taken that. What we want to see from these is for these highs to be taken, for bullish structure to be intact. And then we can also look at that and say, okay, well, if the risk markets are still catching a bid here, then that's what we want to look at, all right? Can we then look to that money and that risk appetite flowing into crypto, all right? So just a little bit of an insight for that one. So let's take a look at OM. Which, hang on, OM was Mantra, wasn't it? So now I see it wasn't Manta and thing, it was OM. Here we go. So, all right, God, that had an absolute rip, didn't it? So I've obviously missed out on this one, but this was obviously clearly news-related rip. That's really cool to see. Obviously, you are going to get those outliers that are being supported, all right? So yeah, tricky to trade these because you've got no data to the left, right? And then as you look at these, you see these massive kind of pumps. The best way that I can suggest to look at these is that markets do like to move efficiently. When you look at these moves, look at these, for example, what happens? Price moves higher, reacts at this bullish gap, continuation, yeah? And also respects the order blocks. Yeah, so reaction of a bullish gap, price sets a bullish order block. What then happens? We then retest that order block, delivering for another bullish gap. What happens? We then retest this order block. That's holding the market up nicely to the upside. What else was doing that? There we go, bullish gap. So what have we done now? So price has once again continuation, closed above these, setting these as an order block. So one area that we can certainly look, because we didn't have a gap directly below price, but this is where we can look to participate. If price drives down into this gap, we would look for buys in here to move higher. We have just snuck above this actually. Right, not necessarily the most convincing close when you look at the other, high impact candles here, but ultimately as we move down to a lower time frame, we want to see that hold at the moment. So if we want to get aggressive with this, let's have a look where we would want to be potentially buying this from. I really like this here. Yeah, we've got this one a little bit above it, so you can adjust it to be above that as well if you would like. But these down closed candles here, price closed above this area. This hasn't been retested yet. If we want to see early stage continuation, this is what I would be looking for. If we start to really close candles down here, then that gives me an indication that price is now looking to move lower. If I want to see price moving down towards here and I want to look at intraday trades, what I want to see is something like this. I want to see price move down with some momentum and then give us a bearish gap that we can then look to trade this lower. Ultimately, I still think this is a really good area to look for long setups. Let's look at VET. So where are we coming from here? Price, nice reaction at this order block. You know, this kind of consolidation down lower. We won't worry about that at the moment. We've seen this across the board on a lot of alts. Price kind of purged down to a key level, which was ultimately this untested gap in this order block. Look, buyers stepped in heavily here because look at the reaction that came off the back of this. This is the origin of the move, but price came back up into that, reacted at this gap, big move higher, exactly as we looked at before, price respecting the order blocks and the gaps. So as we're looking at this here, the most bullish thing that we could look at is for these equal lows to be run out and for price to just get a really nice reaction from here. Unfortunately, on a daily scale, we'd have to close above this here because they're the down close candles that we're looking at. So this is an interesting one. I'd like to see price flush out these lows and move higher, but I would actually be looking at this much more on a 4 hour. And yeah, this is the kind of thing I was hoping to see actually, is this. We've got a gap higher. Right, so this is sat within a bearish gap. I'll leave that red so it kind of really indicates it. Yeah, I think price needs to close above this, inverting this gap, and then we look for this area to become support. Yeah, because again, our last swing higher, close above that, we look for that area and this inversion to then act as support to drive price higher. Ultimately, we're just kind of reacting at this at the moment, right? So we can also see how price reacts at this bearish order block. So you can see the stacked kind of resistance we've got here. If we flip those, great, look for them to become support, and then look to chase out these highs. However, equal lows like this do very, very often get taken. So if we do something like that, then again, it's all about how we recover this level and then look to move up from here on VET. So close above here on the 4 hour, I think we can be looking for longs into these highs. If not, sweep out these equal lows here, and then we see a strong reaction above, we look for longs from here, all right? And then link. Very, very similar here, right? We can see here from link, looks like this across a lot of them, except link has the honor of already kind of taking this low. So good initial close back above here and above this low as well. Yeah. So you see some buyers were willing to step in here, either that or you need to appreciate, you know, people are going to be taking profit here as well, which can hold that. But while we hold this level, I think that's okay. Price could be looking to draw back to this bearish order block. So we want to be aware of that. So intraday longs up into this area definitely aren't out of the question. I need to remember ultimately that we're still bearish, right? So however you're looking at this, until we see some major structural changes, we need to appreciate the conditions. Again, gap high here. So first thing we could look for, price driving into this here. Now we need to be very, very cautious here because of this being the daily order block. We would need to see price, or I would need to see price close above not just this gap here, but also this one as well. There's a smaller gap just above it, which would show up on a slightly higher time frame. We want to see price close above here, and then we can start to look across here and say we can move towards these equal highs. Ooh. There we go, perfect. And for me, it's just as simple as that, really. I think price breaking down from here, I'd like to see it do it from here. So I think if we are going to break down, it would be something like this, you know, versus if we close above this, we look for retest of this area here, and then we're looking for price to push up. At the moment, we're bearish. Unfortunately, I know people don't want us to be, but that is the nature of it. So that's how we are dealing with it, all right? Awesome. Okay, yeah, we'll fit Sui in. Why not? Let's have a look. So we can see from our analysis previously what we were looking for. We were looking for price to close above here to get bullish. It didn't happen, just another point of rejection. This was a really nice short trade that we had set up here. We had a balanced price range running through here, as well as our bearish gap, right? Balanced price range is just where you have, in this case, a bullish gap close through with a bearish gap. We then look for this to offer really strong resistance. Ultimately, we got that, which gave us our bearish bias here on Sui, although we were kind of, or I was anyway, looking to take out these lows. You're very welcome, Squad Busters Grinder. Again, you know, from liquidity point of view, price has stepped back above this again now. Is that really enough? I'm not so sure. I much prefer to see these lows run. Okay. However, you know, what I want and what price does are obviously two very different things. So as we look at this here, we would need again to close right above these candles. So what we were looking for over here, we would now move to this. We need price to close above that to give us that change in state of delivery, to give us that bullish order block. If we did set that, it would have become a high probability order block as well, same as this one was, right? Because we've taken some form of liquidity, all right? So swept the highs, price has come down to here. We've now swept these lows, price moving higher, all right? In fact, why this was such a good order block, not amazing, but we're within the realms of these other order blocks here. But when we got this up close candle here, what had price done? Well, price had swept liquidity from this high, broken down below this, closed below this here. So we look for that retest there and for price to sell off. So now we're kind of in a situation here where that was the order block. So that's probably what's capping the market here. And we need to see price above this before we can get bullish. However, intraday doesn't mean we can't look for longs off of this position here. But obviously, as we zoom out, we can see a lot of liquidity resting below us still. Equal lows resting below us still here as well. So it's a very, very interesting one here. See if we can get a bit more granularity here on the H4. Okay, I really like this in terms of looking at this as an initial bullish recovery. We've got a very small local sweep here. We obviously have our high time frame sweep, which is more important. But what I like about this are a couple of things. One, let's see if we can hold this. Yeah, so that's the high that's now been closed above. So we want to see if this area holds. But just as importantly as that for me is this inversion gap. All right, I want to see this hold here. I want to see this hold, and then I want to see price closing above this. That will give us a change in state of delivery. That confirms our order block. So I'm either looking for cheeky longs in here, up to there, slightly less probability here, right? Although we've inverted this now, we're looking for this area to hold. But I really want to see price closing above this because, again, look at the trend line liquidity that we have over here. There's a lot of liquidity there to be run. We've run most of this out now. It's why I would like to see, if I did want to see price run out this low, but it doesn't have to. If we start to break down here, though, and we close back below this inversion, it will invalidate it. And I will then look for this low, and this obviously key low down here to be run. Just very quickly, let's just take a look. Thank you, Craigie boy. I appreciate that, mate. Conditions on the hourly to look for that breakdown further would be this. Here's our hourly bullish gap. If we're looking for a retracement here, this order block doesn't hold, then price could catch bids here and move higher. So if we close below this, again, we invert this, then we've got reverse inversion here. This could be the early stage sign that price is looking to seek liquidity below these areas. We have switched bullish here in terms of structure. Price is respecting these gaps now. So we do get a bullish reaction here, and it would be a retest of this bullish gap as well. Then this could be the area that holds and pushes price higher. We need to remember that's on an hourly. The 4-hour gap is what we have here. So this can drive as low as it wants, as long as it comes back and holds this area. So drives down into here, wicks back above into this area. I think high probability set up so that we see some relief here and some long plays. But if we start to violate these areas, then I think liquidity is being hunted lower down. All right, legends, thank you so much for today. 55 minutes, not quite 45, but we got there. For everybody, all of the Bird Nest members, please do remember, we've got Live Trade Club today. We're about to start that in 20 minutes from now. All of the setups that we're looking at on the NASDAQ, as well as AVAX, have now been shared in my channel. So please go and look at the conditions that we've got. We've got H4, H1 and M15 conditions we're looking at today, and we're in a little small open play from earlier as well, which I'll run through with you. Good day on the NASDAQ yesterday. We pulled in about 3.4R and a lot of points, so that's taken us to plus 81R for the last 11 months. We're trying desperately to get that up to 100 before the end of February, so a bit of a task on our hands, but let's see how we go. For anybody that wants to find out a little bit more about us and what we do over at the Bird Nest, you can find the information down in the description. For anybody that wants to know a little bit more about me and how I trade, you can find me over at the Bird Nest, where I'm the head of a wonderful trading team, who are just some of the finest traders I've ever worked with. And you can find us on Twitter as well. And if you want to find me on Twitter, it's BC_Richfield. Wishing you all a fantastic week ahead. I'll be live with you all again on Monday and Wednesday next week. Let's see what we get. And ultimately, just remember to trade safe and keep an eye on Trump's speech, which is just over an hour from now, as well as FOMC later, to see if we get a hawkish or a dovish tone from the Fed, from Powell, which can obviously inject quite a lot of volatility into the markets, which we will look to decant down tomorrow. Have a fantastic week ahead, everyone, and I'll see you around the nest.